I'm going to share with you what I'd call the secret sauce of extreme scalping. And by extreme scalping, what do we mean? Our average time in a trade is about 4 minutes. So I think that qualifies as extreme scalping. It's certainly not swing trading or position trading or investment trading. And it's using our tape reading process that includes the trend dots and the isolated pivots. We find that all instruments play well with this system, and even this powerful 6E currency futures trade that we took this morning, which I'll show you in just a second. But before we do, keep in mind that all information in this video is provided for educational purposes only and is not an offer or a recommendation to trade futures, stocks, options, or Forex. This is training, this is teaching, and just make sure you do some practicing in sim accounts before you put your real money at risk. So let's take a look at this chart of the 6E. This is the euro-dollar currency futures. And this was this morning being November 9th. You'll see that I had entered on the pullback to the trend dot right here. Now, it was a late entry as far as I'm concerned. The ideal entry would have been right here. I was busy making another recorded video at this time, so I wasn't sitting in front of this chart. But this would have been the ideal entry. We had initially we had the thin vertical line, the 15 crossed above the 30, and then we got the bold green line, the 30 crossed above the 60, and then we like to wait for pullbacks, and we got a beautiful pullback to the daily VWAP right here, this magenta solid line. So that would have been the ideal entry, but we instead utilized our trend dots and our isolated highs and lows to make this trade work for us and add to some additional profit to today's take. We had the entry on the trend dot tap right here, and just one contract, one mini contract. And then let's take a look at the using the trend dots and the isolated low. You see that price did close below the trend dots, and this close right here is below the trend dot, but because the trend dot is higher than the prior, this is just a trend pause. We were in this upward trend, so we're just in a pause at this point. The next candle, we see that the trend dot is still higher than the prior, did close below it, but we're still in a trend pause. This one right here actually puts us into congestion because the trend dots are equal with each other, and the candle closed below it. So we're now in congestion. So we identified our most recent isolated pivot high, which is right here. I put the dot right there and drew this horizontal line. And then we want to find within the next 3 to 5 candles an isolated pivot low, either a fully formed one or a partially formed one. And it turns out that we very quickly got a fully formed isolated pivot low right here. So we drew our horizontal line. And remember, what we want to see is price hopefully respect that since we're going long, and in fact it did. It even put a tweezer bottom right there. This low of this candle is the same as that low right there. And then it reversed up and put us back into the long trend. And then let's take a look at the next chart. What I did is I drew a channel, and I do it right from that pivot high to that recent pivot low right there. And price, what I'm hoping to see is a candle close above this isolated pivot high, and stay away from this pivot low down here. Let's just see what the next chart does for us. Okay, it did not. This candle did not close above it. It came back below, and the next candle shows, well, still hasn't closed, has it? But we're looking at some healthy profits. We're up near this earlier isolated pivot high right here, And there's our target. And frankly, we used the target using the familiar, well, maybe it's not familiar to you, but the Camarillo pivots. And so I had that on another chart, and I thought, well, you know, I've already banked some profit today, so I'll be conservative with my targets. And so we set our profit target there, and you can see that our target was hit. Now, something I want you to take a close look at. Remember me talking about my RSI. That's this green line right here. It's making its way up. And remember, its axis is the y-axis over on the left-hand side here. And I'm very interested always in the 50% level of the RSI. And I've found that it's helpful to apply the RSI onto the price chart rather than in a panel below the price. Couple of things I notice. I'm seeing that price respects this RSI 50 level right on here, and if I had this indicator down below, I wouldn't be able to take advantage of it. Look how price comes down to the RSI 50% level, bounces off it, comes down again, wiggles around, finally pulls down below it, and then price comes up, finds some resistance once again on the 50% level. Now the RSI has crossed above the 50%, but it's pushed back down with a pretty strong short candle right there, negative candle, only to tap our trend dots, by the way. And then, so the RSI is continuing to move up. Now here's the point I wanted to make. See this red line right here? That's the RSI 68% level. Now, traditionally, the default setting is a 70% on the high side and a 30% on the low side. But I'm using something that was actually championed by a fellow named Dean Malone, who I used to have as a mentor probably 15 or more years ago when I started trading. And he felt that this was more effectively placed at 68%, and the overbought level would be the 32 level instead of the 30. And you notice I have green there because I figure if it's overbought, then there's a likelihood that higher probability of a reversal at the oversold area, I should say, the oversold area. So I make that green and I make the overbought area red. I hope I used the right terms there and didn't confuse you. But in any event, here's what I want you to see. The RSI is moving up to this overbought area right up in here. And I think my next chart might, yeah, see how the RSI is coming right up to this. And simultaneously, price begins a reversal. Now it did achieve a 4.5 to 1 reward to risk level up here. And had you been in just the simple one mini contract, that would have represented a $250 profit. And by the way, here's those that tweezer bottom again that I identified. But looking at the next chart, you can see it was pretty severe. Once RSI got up to that overbought level right there, we had a reversal with a huge bearish engulfing candle right there. And right now that we've got, maybe I could show you my live chart, because I think, yeah, let me see, let me bring that live chart over. Maybe I can put it right on top. I think this will work. Yeah, do it right like so. And we have, let's see, we had that, here's that huge bearish engulfing candle, and that was at about 10 o'clock. And what time is it now? It's 10:43. And we see that we came down, actually came right down to this congestion zone down here, and it looks like it's trying to make a move up here. It did cross above and close above our trend dots. So this might have more legs to the upside at this point. I'm not making any predictions, but if I look at my tools here, I've got my, notice that our 5-day moving average, that's this thick dim gray line right here. I like to put my cursor right on that and see if it's sloping up or sloping down. You can see it's beginning to slope up. My daily average, the dotted gray line, is coming up. They're marrying each other right there. My daily VWAP is sloped up, and all three of my EMAs, the red, the goldish, and the blue, that's the 15, 30, and 60, are sloping up. So this could very well just be a time of maybe just a short break until it makes another move up. We don't know. It's hard to make predictions, but it looks like you could almost see a bullish flag being formed right there, and with a possible reversal to the upside. And we have the green background is telling me that my 30 weighted moving average, which is the thick green one right there, that's turned green, as has my well, let's see. No, my RSI is still red. You can see it's still red. I want to see that turn green to be in concert with that 30 weighted moving average as well for a continued move up. But this certainly looks like it's a bullish flag in the making, kind of a sloppy one. I'd like to see the candles more tightly formed than this this oscillation back and forth here. But we want to keep in mind the fact that it's 10:45 and we have FOMC speak here today at 2 o'clock. So we want to keep that in mind, because price can often go into a funk leading up to the Fed speak at 2 o'clock. So I think what I'll do is I'll put this video on pause and let price work its way and see if it does in fact break above this bullish, what might be a bullish flag. And again, that's not a prediction, nothing to trade on. It's just from an instructional standpoint that I share it with you. So I'll be back in a few minutes. Okay, it's been a number of hours since I put this on pause. I think we were back somewhere around in here, and I've after I shut the video down or put it on pause, I drew this, what was a potential bull flag right here, and you can see that it tried to get up here, but just didn't do it, and then fell back below our trend dots. And a couple of things to note here that I've identified. This was our tentative target if it had successfully broken out of that bull flag. Yesterday's high line is right here, and you can see how price addressed it right there. Yesterday's close is this level right here, and that can have an impact. You can see how price broke down below the daily VWAP, and actually right here, and then came back up and then tested this yesterday close, came up. This would have been a real great entry right there. I mean, first of all, you have the vertical thin line here. I've already explained what that is. I don't want to be too repetitive. Same thing with the solid red line. So now we know we're waiting for a pullback. And look at this, right back not only to the daily VWAP, but also the trend dot. This would be, for me, the ideal entry right there when it hit this trend dot right there. Been a wonderful trade. And where did it go? Lo and behold, right down to the 100% target based on the Ninjacators initial balance indicator. That's now I put this on when the video was on pause. I didn't have this on earlier. That's this bluish square right here. I'll get rid of this congestion zone. We're done with that. I can get rid of that. So this blue square, that's first hour of the New York Open, and that prints this 50% target and the 100% target. So you can see it came right down and basically touched it to the tick, and really made a statement with that, and that's the 100% target. But getting back to this entry, just a sweet entry. And the other thing that's to keep in mind is these bull and bear flags are a wonderful chart structure to keep an eye out for. This, I like this because it's a tight bear flag. See how this nice and tight rather than really wide candles. So it came right up here to yesterday's close, which is an influential level. It's something you ought to put on your charts. And then we got a tweezer top. See that triangle I put there? Tweezer top right there. We've got our moving averages are properly stacked. They're sloped. We are going counter trend as far as the 5-day moving average right here. That's the SMA, 5-day SMA. This is the 1-day SMA right there. So they're both sloped up and stacked properly for a long. So be aware that it is a counter trend trade, at least as it relates to those two indicators. And what else we have? We had a pullback, came up and tapped the daily VWAP right here, excuse me, and it gave you a second chance to enter. And then we had one of those Japanese candle formations that I can't pronounce. Somebody's going to have to help me with that. And rolled over from there. So that could have been a second entry right there to for a short. And what else do we have that's oh, let me see here. Let's take a look at the RSI. See where the RSI is. That crossed below its 50 right here. Here's the 50 RSI level right there, crossed right below. So that was all congruent with a lot of these areas which would have been an ideal entry. There's another tweezer top. And as you know from listening to me explain the trend dots and the isolated pivot highs and lows, when this candle closed above the the trend dots right here, that was in congestion, because see the trend dot's higher than the one before it. So there you can see that we did not have, let me just borrow this, make a copy, and let's see, we had a isolated pivot high right there, and then once this broke above right here, we had an isolated pivot low right here. So let's do this. Let's put one down here. We had one there, and then you can see how this congestion channel begins to get compressed, right? Whoops, put it on the wrong one. That's actually the same level as that, right? We have two isolated lows here and here, and this did not close above this isolated pivot high right there. So see how that kept you in, just based on the rules? Now it pushed above it, and frankly, it came up and hit our RSI overbought level up here at 68, this red dot line. But it did not close above this recent isolated pivot high, so you'd stay in, and then it fell below. That's what we wanted. We're trading to the short side. Came down here, gave us this bear flag up here, gave us a tweezer top right there, and did not, well, let's see, I'd say it closed right on the dot, and then opened, and then promptly fell, so we didn't get threatened there. Came back up to our trend dots, and this would be a trend pause, closed above the trends, but the trends are not level. This one's lower than this one. Now we're in congestion right here, and let's begin drawing our pivots, our pivot lines, I should say. Well, we had one way down here with that big precipitous fall, and now we're looking for an isolated pivot high, and the first one can be a partially formed one, so that would be right there. This is a partially formed isolated pivot high right there. So if price were to close above that, then that would stop us out. And it doesn't necessarily mean we go long, because we don't have other things in alignment for a long trade. So let's see what else we got here. Let me grab this one. we have another isolated pivot low that's fully formed. And we have another isolated high right here. So see how what we're getting is a compressed congestion zone. Let's see. See how this is lower than that isolated pivot low? So we wouldn't drop this down there. We only compress. We do not expand. So our congestion zone is there up to there, because this pivot was lower than this one. So we're compressing our congestion zone, and we're giving price a chance to tell us what it wants to do. Well, it was very clear in what it wanted to do once it closed below right here, right? So we would have stayed in it. We would have continued to be in it, and frankly, you'd still be in it, because here's your trend dots up here. So interesting example. And I guess that's really, I don't want to beat this to death, but I do appreciate your spending the time, and I hope it's helpful to you. And please, please, please take some time to learn how to read the trend dots and the isolated pivot highs and lows. They're just a dynamite way to trade. And also, as I've said often before, sign up below, subscribe to our videos, and also sign up for the free Indicator of the Month Club and save well over $1,000 over time getting these free powerful indicators. So until the next time, safe and profitable trading.